What's going on YouTube? Snowski here, coming back with another YouTube video. I hope you guys are having a wonderful day, a wonderful weekend of course, and a wonderful life. Coming into today's video, we're going to be breaking down very important, something that I've been actually asked multiple times, is how to predict market conditions through the lens of quarterly theory and smart money concepts. Now, of course, coming into today, before we break things down, if you guys aren't already familiar with my 100% free Discord server, Collectors Club, where I constantly put out 100% free content for you guys, I'm actually putting out, as we speak, a suggestion for upcoming free studies that I constantly do. All the way at the bottom, we can actually see that I'm constantly doing free studies. Now, coming back into it, I put out a quick announcement to everybody. If you guys are unfamiliar with my content, I currently teach quarterly theory and smart money concepts. Join that up, put your suggestion. Coming into tomorrow, 3/16/26, I'm going to be putting out a video and a notion guide breaking down a specific concept. I'm going to be doing this for the remaining of the month of March for you guys. But of course, you guys are here for the video. Coming into today's video, how to predict market conditions through the lens of QT and SMC. Guys, if you enjoyed today's video, put a comment down below. Tell me if you guys like content like this, so I can constantly keep putting out more and more content like this. As I understand, a lot of my videos are trade recaps, and a lot of you guys actually want educational content. If you guys like today's video, put a comment down so I know you guys are enjoying these type of content videos, and I will put more out for you. Now, hopping into today's video, how to predict market conditions through the lens of QT and SMC. Within my 100% free Discord server, Collectors Club, earlier today, around 1:47 p.m., I would give or take 2.5 hours ago, I put out an announcement of what exactly am I seeing on our higher time frames, and what exactly is the utilizations behind this, right? Why exactly am I talking about the Snowski forecast? Is one, make sure you guys are constantly looking at that. I put very good important detailed information into it. But two is what we're going to be talking about today, coming into how to predict market conditions. And what we're going to do is start in a basic level, and we're going to go all the way up to expert. Okay, if you guys are obviously familiar with quarterly theory, we understand quarterly theory is always moving within quarters, right? That is literally the foundation of it. Okay, now quarters, reference to as in AMDX, accumulation, manipulation, distribution, and expansion. We understand that, well, it could be vice versa too. It could be XAMD or AMDX. Now, every single cycle, we understand time is fractal. All quarters are constantly moving in sequence. All right. So now, if we want to constantly try to predict market conditions, and this is one of my biggest edges in trading, is so many people try to, I guess, figure out how exactly do I get to predict market conditions, market volume and volatility, where the market is likely to go, which sequential SMTs are holding a protected line of liquidity and which ones aren't, right? And it all comes down to multiple different factors. So today's going to be a lot of note taking, and I want you guys to keep rewinding as much as you as possibly can, as I'm going to be talking about multiple different things. But let's start all the way at level A. Okay, coming into quarterly theory, we understand all quarters are reference to time, right? And each quarter's given its cycle, right? Let's think in reference to what we're looking at right now, a monthly power of 3 development. Okay, if we're looking to a monthly power of 3 development, there's going to be 4 weeks within that month, right? And each of those weeks are expected to do a specific delivery, a specific damage on the market, whether that's engineering, creating protected stops, doing damage against liquidity, right? It's going to do something. And between each of those expected quarters, as we understand, there's going to be 4 different weeks. Understand, guys, this is fractal. You can utilize this information for higher and lower time frame power of 3s. Okay, but just referencing to our monthly power of 3. As of right now, the March 15th on Sunday, we are currently 2 weeks into, well, coming into the 3rd week now, 2 weeks prior of our monthly power of 3 development, meaning we've already finished 2 quarters. Breaking down what I have on my chart, we have currently completed expansion and accumulation. We are coming into manipulation next week, followed by distribution quarter. Now, breaking down last week specifically, if you guys have a background in QT, you would have understood that, okay, QT, what exactly is the, I guess you could say, functions of QT? What exactly is so prioritized when it comes to time and price delivery is when price is going to run. So if we understand that utilizing specific quarters, each quarter is expected to do a specific damage, they're expected to do a specific condition. Let's think. If last week was accumulation quarter, and we understand in accumulation quarters, not necessarily by what it looks like, but why what it does is the most important factor, right? What do I mean by this? Is so many people get stuck up on the factors of, okay, what does a quarter look like, and not necessarily what a quarter does. And let me tell you, you need to reframe your entire outlook on what you guys are doing, because expansion, accumulation, manipulation, distribution, they can be either low resistance or they can be high resistance. But what exactly is going to tell us a specific quarter's function has completed is what it does. Okay, now let's think. Devil's marks. Devil's marks is a smart money concept that is basically the study behind manipulation and distribution neglection. What do I mean by this is that think of a monthly power of 3. Let's say hypothetically a month opens and all we do is just pump and we lack any delivery below the opening price. This is basically considered that, okay, instead of power of 3, right, AMD, it's simply referencing to either power of 1 or power of 2, right? It basically means that it's a lack of manipulation. And what does that mean is everything from the opening price ongoing is manipulation, and then you're utilizing the opening price, which is considered a devil's mark, as the draw. Now, devil's mark, not necessarily just referencing to a lack of a price delivery above or below an opening price, but also does it consider a protected stop? Does there have a sequential aligned with price, right? Because time and price is how you correlate and get precision. You can't have just time, you can't have just price. Okay, so now let's start putting things together. If we understand openings, key openings, can have the same exact criteria to a true opening, right? Think of true week opening. True week opening was neglected a valid manipulation within the week's price delivery. So this is all going to start, putting together. So just bear with me, okay? If last week was expected to be manipulation because the first week looked like accumulation, this is where you would have went wrong. If you were to assume last week was accumulation just based off of what it looked like, you would have expected that this week was going to be manipulation. Now, a lot of people understand that there is a yearly sequential and a quarterly BISI SMTF that was hit at the low of this week. And a lot of people are seeing that as, okay, valid manipulation to consider this week manipulation. Let me tell you why I beg to differ, why I say otherwise. If we are to reference to our higher time frame power of 3s, such as our yearly, our quarterly power of 3s, you guys will get to the assumption that we are expected lower delivery. Okay, now I'm not going to be breaking that down in this one as that is an entire lesson of itself. But if you guys are familiar with my content, you would have known that, okay, I'm assuming lower and lower prices, right? Quarterly BISI was not where I wanted to stop. I wanted to see us lower. If our expectancy, and if you guys want a replication of previous data, go to last year. You'll see what March did at the end of the year paired with manual intervention news. Okay, so if we're expecting our quarter and our yearly power of 3s to eventually be bearish, and I mean eventually as in like right now, okay, this month and ongoing, is expected to be bearish, okay, we have to understand that this month, in replication of last month and based off of what we have at high of the year, is expected to be bearish. So if our month is expected to be bearish, and I mean aggressively bearish, I don't mean sitting here, that means that we are currently putting in a bullish yearly cycle and a quarterly SMTF to temporarily hold price, but not actually hold price. Okay, and I've called multiple moves like this before, so trust me, I know what I'm doing. Just hear me out, okay? If we put in a yearly sequential and a quarterly SMTF, that is not necessarily stating that the week's bullish power of 3 development was actually signified as a protected stop. It does not mean that this week was manipulation, because if we're looking for lower delivery, we want to see a bearish cracking correlation. If this week was manipulation, we would have purged out our previous week high. We would have put in a monthly cycle at the highs, and we would have started delivering lower, as understanding true month opening was the opening of this week. We would have done a monthly cycle above, clearing out those previous week highs, and then fell over. That's if this week was manipulation and last week was accumulation. But what did we fail to do is clear out those highs. On top of that, putting in true week opening and neglecting any manipulation. We pumped above it as in price, but we never confirmed it by a sequential. There was no weekly cycle. There was no monthly cycle, meaning it's considered a devil's mark. It was neglected. It was engineered. So I want you guys to actually hear me out here. If quarters, how to predict market conditions, if quarters give us hints, but also utilizing other aspects such as devil's marks, key opens, true opens, and the expectancy of our fractal power of 3s, if we're expecting our quarterly power of 3 to be bearish, and we are currently in the last month of it, last 2 weeks pretty much, it means that this month is going to be bearish. So what is it going to do during an accumulation quarter? Is it's going to engineer liquidity. Very self-explanatory, guys. So think about this. If we engineered buy stops with our previous week high coming into next week is going to be expected to clear those highs, putting in some type of monthly sequential to then validate lower delivery during the following week of distribution and likely go against the low of the month, which has the yearly cycle. Understand that yearly cycle is temporary, not going to hold price because of our higher time frame power of 3s. We are not in a bullish market yet. We are currently still going to be selling off until next month, likely even the end of next month. Okay, so coming back to how to predict market conditions. If this week was ongoing, if we, let's say hypothetically did not complete this week just yet, let's say we were in Wednesday, and we understood that due to us engineering highs on Tuesday with our previous week high and falling over below true week, lacking a weekly sequential or a monthly sequential, you have to be utilizing this as weakness. Okay, these are hints. These are the market constantly telling us that, okay, we are neglecting true week for a specific reason, not for it to be a draw on liquidity this week, but for us to be considered a devil's mark, right? Because if protected stops are considered when a higher time frame aligned sequential is in play, unprotected stops are vice versa. So if true week neglected had no weekly cycle or monthly cycle above true month opening, it means that it has a lack of protected stops at the high of the week right now, at the high of the month, meaning this week's expected market conditions of how to predict market conditions would have been high resistance. Now, we can obviously see that Monday expanded super aggressively, but that was due to the yearly cycle. That was before true week. So that's not enough information, right? Understand, how do we predict market conditions is always by the function of quarter one, right? Quarter one of Monday of the weekly power of 3 development, proving expansion, super aggressive, then opening up on Tuesday true week and neglecting putting in a new high above our previous week, was stating that, okay, we're very likely to be high resistance if we dip below it. And that is simply due to pretty much the understanding of what's to come later, right? Because true week neglected, no weekly cycle, no protected high, engineered highs with our previous week, meaning this week was high resistance ever since Tuesday's opening. Why? Because it's stalling until an additional week, right? Something I constantly teach, time distortion. Time distortion is a big theory. It's a big concept that I talk about, and it's basically the understanding of quarters moving within other quarters. But what do I mean by this is it stalls. So what exactly did we do? Is Tuesday accumulated those highs. We understand that, the primarily movement of this week was finished on Tuesday. Meaning from Wednesday, Thursday, and Friday was simply filler days to rebalance the entire weekly range down into OTE, to then likely give us bullish sensitivity coming into next week to purge those highs during a monthly manipulation, to then distribute the following week. Now, of course, if we do that manipulation early next week, we're likely to see distribution start in that week and then continue into the next week, pretty much with the understanding that I'm expecting aggressive lower prices, right? So I know it's like a lot of information of how to predict market conditions through the lens of QT and SMC, but let's simplify it, okay? If we can utilize the same understanding that, okay, devil's marks tend to occur on accumulation quarters because we're engineering and not protecting stops, we can utilize the same thing for fractal power of threes, right? I want you to think vividly about a daily cycle. A daily cycle, okay, what's going to happen is, actually no, let's reference to a weekly cycle and then a daily cycle, okay? If a weekly cycle is going to have 4 quarters and then Friday's function just like any other quarter, right? Or just like any other cycle, we're bound to have an accumulation quarter, whether that's on Monday or Tuesday, okay? Whenever that happens, we understand that the day's delivery is going to have a true day opening price. So let's think. If we're in a week's delivery, we understand that, let's say function 1 was expansion, so we're expecting quarter 2, Tuesday, hypothetically, to be accumulation. If we understand that it's going to be accumulation and we have a draw in mind, and we understand that we're going to be engineering draws with this draw to pretty much be engineered for the next day or the following day, we as traders with the information of QT and SMC can know that true day opening may be neglected. Now, what do I mean by this? It may be a devil's mark. Why? Because we're known to engineer draws in a market condition of such. So what does that mean? How to predict market conditions. If Tuesday is accumulation, we're likely to move devil's marks into the market. We're likely to neglect specific opening prices, no valid external sequentials to prove a manipulation of the day. It simply means you're in for a high resistance liquidity run, which then tells you that, okay, we're not necessarily referencing to higher time frames. We want to be trading within our internal sequentials, okay? So it's like a lot of information. A lot of this I truly feel is something that you guys may not pick up on. You guys may need to rewatch this video many times. And that is simply due to the fact that a lot of this information is from my private circle. It's utilizing what to expect in the future and how that's going to play now. And you have to be thinking about this. If we're expecting a delivery below the market, highly volatile for the remaining of this month, that means the next 2 weeks, it's likely that when we engineer liquidity, we're going to engineer it and pretty much neglect it. We're going to have specific openings. We're not going to do specific damage because we're engineering. So if true week opening was neglected, and it's something that a lot of people don't tend to see, right? You tend to see weekly cycle, monthly cycles above or below it to prove its delivery. It's telling you that it's setting something up that you may not see right now, but you will see ongoing. So while true week opening was neglected, it's proving, it's engineering as a devil's mark to eventually be a target throughout the remaining weeks ahead. And that can be utilized on every power of 3, right? I want you guys to just literally push aside this. Think of basic power of 3. If 30-minute power of 3 was to open and immediately just start spooling on all assets, no redelivery below it, just running, just devil's mark straight up. It's not necessarily stating that it's a draw. It could be utilized as a signature of strength. Why? Because if we constantly reference to what the higher time frames are saying of what maybe pre-market was saying, let's say pre-market has external sequential, everything proving that market is going to run, okay? That means that the likelihood of a devil's mark opening and just spooling is likely. But what does this mean? It means that if we lack a manipulation for 30-minute opening, it's going to be either two things. It's going to be a draw if it fits narrative, If pre-market's already proving that such delivery is going to run, it could be used as strength, meaning that the opening spool away is showing how strong the market is, and the likelihood of reattempting that level that day or that given time is less likely. Maybe a draw later, keep it on your charts, but it's not right now. Okay, and the same thing goes for every power of 3. So we can utilize it on higher time frames, lower time frames. There's been weeks where we literally neglect the entire weekly opening price the entire week, and we reattempt it another week. It's because of what the specific week is. What's the expected condition? What's the expected quarter? Is it accumulation? Is it expansion? Is it manipulation or distribution? Right? Think. Expansion is more of a filler, right? You can see anything within an expansion quarter. Accumulation is engineering stops. You don't tend to see given time frame aligned sequentials. You tend to see unprotected stops. Manipulation, you tend to see the pivot for the power of 3 cycle, which is always confirmed by a sequential. Manipulation quarter is likely to confirm specific true opens and key opens. Distribution quarter, likely to be the most volatile and likely to engulf majority of the cycle range. It's likely to do the damage, and it's likely to clear out whatever the draw on liquidity was for the given cycle's duration. Okay, so utilize that information to the best of your ability. Keep notations out. Constantly keep journaling how these fractal power of 3s are moving in sequence to the specific quarter and the expected condition of each. And okay, if there's a devil's mark, is it a draw or is it a signature of strength or weakness in the market? And how can we use this to our advantage of understanding when high resistance or low resistance liquidity runs are in play? I want you guys to think about risk management rules. If you're trying to build a plan of whether you want to risk highly or low on a specific day's condition of the week. Let's say Tuesday opens up and hypothetically it's accumulation. You understand that devil's marks, accumulations, unprotected stops are likely. So what does that mean? Maybe dim down your leverage a little bit, right? Because high resistance liquidity runs mean a lot of overlapping candles, the likelihood of you getting stop hunted before a move occurring. But if we're expected to be in a distribution quarter, we understand the draws clear. We have a manipulation prior. It's very, very clear that the opening might be a devil's mark signature of weakness or strength, and we understand where we're going. If we know that, pump up your leverage, and that's where you majority of the time want to present higher leverage to get more money made within a week. All right. So guys, I'm going to be ending this here. Of course, I just wanted to be a nice, quick little lecture, getting things over and covered. If you guys aren't already part of this Collectors Club 100% free server, join that out. Put in your vote for your suggestion of the expected notion that you want tomorrow. I would love that outlook for you guys. Okay, please. If you guys loved today's video, put a comment down below. Tell me, and I can obviously make more videos like this. But I hope you guys are having a wonderful weekend, of course, utilizing your time wisely. And of course, I will see you guys coming into likely tomorrow if a trade recap presents itself. And of course, I'll see you boys at the top. Peace out.